Welcome back to the Eric Krown crypto channel, wishing you a happy and healthy start to this nice hump day. We got some hump day action going on right now. Short-term timeframes are the only ones worth looking at as of the last like 3 days, but there is a few catalysts actually coming into today with the beige book. I believe it's the beige book numbers coming out for Wednesday. Anyways, with that in mind, I wanted to follow up on the short-term time frame analysis. Yes, we still got the sideways range that we're looking for, but a little bit of the trap scenario that we also spoke about on yesterday's video. So I want to first and foremost start off with that. However, before we get into it, I do want to subtly shill my Instagram. Been posting on a Bitcoin and trading related content there. There is a link in the description below. And then of course, Bybit still has a promotion going on, of which you can find in the link in the description below as well. All right, sweet. Let's just jump right on into it and let's start off right over here. So yesterday we were looking at a sideways range between about 19,450 all the way up to 19,750 on the short-term time frames. And of course, a closure above or below would actually resolve the range with a bit of a lean towards a trap scenario to the downside based off of yesterday's shorts video, which we did observe regular bearish divergence on the hourly RSI. Now, of course, hourly RSI, not the same thing as like a higher term time frame or even a medium term time frame for that matter, but good enough to break the short term downside range. And then yes, we were looking for a move somewhere down around about 19,000 bucks with potential for lower, which is kind of where we're at right now. Anyways, in this case, we do see on the 12-hour time frame that hidden bearish divergence has actually emerged on both CME and spot price action. A little bit more obvious on spot price action right here between this point and this point. And so yeah, short term, I do still think that Bitcoin has a little more downside here to go, especially as the 12-hour jewel does lose its upside curvature. So short term likely does trade a little bit lower, probably below 19,000 bucks. But I still want to refrain from calling any sort of major, massive, especially a macro breakdown just yet. Doesn't mean that it can't happen in the future here. And perhaps there's even some things that say that it's rather likely, but I would still hold off on saying that for the same reasons as before that we'll get into soon enough here. But ultimately, what would define a major macro breakdown in my book? Well, a daily closure below the range lows at 18,100, or even just a tick below last week's wick low, which on CME, this specific to CME, by the way, is 17,810. Anyways, with that said, I want to now once again reference that all of the medium and now higher term timeframes are in concert with each other with extreme lows on BBWP, again, representing volatility right here. This is the 4-hour time frame, extreme lows, 6-hour time frame, extreme lows, 12-hour time frame, extreme lows, daily, extreme lows, 2-day time frame, extreme lows, 5-day time frame, relatively extreme lows. This is one of the lowest levels that we have ever seen on this, on the full history of CME, and same thing for the weekly as well. Anyways, so wrapping it up in the short term, probably a little bit of downside extension. Would like to see an hourly closure below if you want to get like super clear about this. The 786 fib retracement here, which is basically 19,000 bucks, and then yes, probably fills out the space somewhere between there and the overall range lows. Let's go reference stochastic momentum to see where the pivots are and see if there's anything in particular worth being aware of. On the 12-hour time frame, we will actually see 12-hour stochastic momentum switch to the downside with a closure below 19,000 bucks even. So it's technically not to the downside right now. It should be to the upside. But if you do see Bitcoin close below that region on a 12-hour time frame closing basis, very likely gonna trade back down, into like maybe the mid $18,000 territory, somewhere between 18.5 to as little as 18.8. So with that in mind, let's go check out the 6-hour time frame, which is now to the downside if it can load. Yes, indeed it is, as long as Bitcoin's below 19,750. 4-hour time frame is also gonna be downside angled below 19,425, basically the same sort of breakdown level that we spoke about yesterday for the trap scenario. 3-hour to call it a trap is honestly disingenuous on my own part, because it's such a short-term time frame move. Like, it really doesn't matter. Is it technically a trap? Kind of, yeah, but it's just we're talking about like really shallow time frames here. 3-hour time frame also downside angle below 19,450, so same numbers coming in right there. And then hourly is going to be up, I think. Or is it? Yes, it is going to be up above 19,150, which actually is starting to get quite close to current price action. So what can we essentially garner from that? Well, as long as Bitcoin's below yesterday's short-term time frame trap, if you will, which was 19,450 on a closing basis, I do still look for this one to trade a little bit sideways, a little bit to the downside as well. in the short term here. Anyways, so yes, we've got that. We've got that. If Bitcoin does pop back above 19,450, that's not like a super massive bullish call or anything like that. Just looking for a return back up to basically yesterday's highs and then come back to it after that, because I wouldn't really want to make any further, analysis on that as of the moment. All right, sweet. So how does this all relate into the more important stuff on the higher term timeframes? Well, you know where I'm going with this one. It's back on over here to the daily for CME. This is the volatility versus stochastic momentum signature, and this is also going to hopefully help explain why today could very easily trade more to the south. In fact, I'm biased towards that, but I would still refrain from calling a major breakdown. So first and foremost, let me actually explain the signal itself. The signal itself is volatility versus momentum. Volatility represented by this indicator right here, the BBWP indicator, and the BBWP indicator getting to extreme lows, which is defined as anything below the 10 percentile threshold, which my cursor is currently on right now, which has happened many times over the full history of CME, has led to an average move of 24.25% almost over the course of about 2.5 weeks on average, I should say. And the stochastic also has been correct in getting the direction of the volatility expansion 83.33% of the time. So first and foremost, what would actually confirm this signal, which then makes it even relevant to be referencing this stochastic direction? It comes back to here, the BBWP indicator representing volatility needs to have a positive slope and above the moving average. It actually has both of those right now. In fact, as you can see right here. The second confirmation, however, is just as important, and that would be getting back above the critical zone, which is the 10 percentile threshold right here. If we see that next thing happen, then we can go and reference the daily stochastic direction, and we can get a pretty high fidelity signal, 83.33 throughout the full history of CME. Doesn't mean it's always going to be like that, and we're talking about statistics, not certainties, obviously, but then we can get a bias on direction for price action and then areas of interest based off of the prior returns from that as well. So in this case, it is actually still angled to the upside right here as of right now, 18,680. So unless Bitcoin closed below there today, and then we actually do see that volatility expansion, that's why I do say it's still I don't think it's super likely that we're going to see the breakdown happen today. I guess it's possible if you do see Bitcoin close below this level, certainly. I mean, that would be pretty fucking damning, wouldn't it? But in this case, I think maybe we get a wick down there at most, and then perhaps close at the strike or something like that, or try for a little bit of a bounce and continue on with the sideways range. Right now, to me, it seems like the path of most pain is honestly more sideways, on the higher term timeframes, that is. Sideways within the overall range between about 18.5, and obviously the current range highs here. But as of right now, it is technically to the upside, and the pivot is 18,800. I did want to add, however, that the 2-day time frame actually closed last night. Similar setup over here, similar sort of things going on with volatility being on the lower side. Now, in fact, it's actually not this chart. It is going to be this chart that we're going to be looking for. Same idea, however, it's going to be volatility versus momentum. Volatility represented by the volatility of stochastic momentum right here. This is just a 2-day time frame versus what we were looking at priorly on the daily. And then, of course, the expansion phase from this one has had a greater result over a great amount of time. 3.5 weeks upon confirmation is what we do expect for the for the result to kind of play out. And on average, we observe about a 39.5% move, which is significantly greater than what we saw over here on average, which was about a 24.25% move. Obviously, you would expect that on a higher time frame. And in this case, the 2-day time frame has actually switched back onto downside momentum. But same thing as this one, as the prior one, we haven't seen full-on expansion just yet. We need to see the volatility component of this indicator actually get back above the critical zone, which is right here. But it's it's starting to give off an early warning signal, an early major warning signal, I should say. So as long as Bitcoin's below this pivot, 19,175, the 2-day also remains to the downside, which I do think is relevant to be known as of right now. So in this case, let's just go reference what the areas of interest would be, both to the upside and the downside, because still it's neutral. Say it's probably more likely to break out to the downside, but that's just me. The thing that does kind of bother me, however, is that it really does feel like one of those times where everyone is kind of thinking the same thing. But average move and the first standard deviation is what I'm most interested in. But for time's sake, I'll just plot the average move. 24% upon confirmation, if it were to occur to the downside, would give us an area of interest somewhere around about $15,000. To the upside would give us an area of interest somewhere around $23,000 to $24,000. So I do like those numbers. numbers, but they're just not relevant yet until we get full-on confirmation. Until then, short-term timeframes are kind of the only game in town, for better or worse. And I think that's a good place for me to leave off on this video. So I want to take a second to wish you the best as always. Take care, much love, and see you hopefully soon.